Hello there. So, for today's episode, we are going to be chatting up mortgage companies and pre approvals. And today we have a very special guest. We would love to welcome Terri to our show.
I'm Terri Gondron or Terri Gondron, depending on where you're at. Gondron in Iberia Parish, Gondron in Lafayette Parish. I'm with Priority Mortgage. I've been doing mortgages for 30 years, and I've been having my company Priority Mortgage open for 21 years. And I am here today to give you some tips on pre-approval.
Yay. And I love that your phone's ringing. It means you're a super busy woman. All right. Okay. So, first off, tell me a little bit about mortgage companies. That is your area of expertise.
Yes. So today I wanted to touch on why you would use a mortgage company and maybe not necessarily a bank. There's three advantages that I can share with you today about using a mortgage company. The first one is variety of loan options. The second one is saving time, and the third one is saving money. So mortgage companies have access to different programs like FHA, VA, RD, conventional loans, jumbo loans. Not all banks offer FHA, VA, and RD loans. Some do, but not all banks offer the government loans. So when you apply with a mortgage company, there's one application, one credit pool, and you're able to shop all the programs that you would qualify for.
That's awesome.
Yep. Number two, saving time. When you apply with a mortgage company, as mentioned, it's one application, one credit pool, and we get to use that to shop all the different programs. For
Awesome.
example, if somebody applies with me, I can figure out if they fit FHA and RD with that one application instead of going to multiple lenders.
Perfect.
Number three, save money. So as a mortgage company, I'm set up with several different wholesale lenders so I can shop rate for my clients. And what does shopping rate do? It gives the opportunity for competitive numbers, and the buyer will save money.
Okay, let's chat up pre-approvals because I know when we get phone calls to see homes and we ask the question, are you pre-approved? A pre-approval to me holds so much more information than just how much money can I borrow. So maybe give us an idea of exactly what a pre-approval is, along with what's involved with getting that pre-approval.
Okay. So a pre-approval is number one, completing a loan application online or by the phone. Number two, providing the list of documents that your lender needs. Very important. An example of the common documents would be pay stubs, W-2s, bank statements, sometimes tax returns if you're self-employed or want to go RD. A pre-approval also requires a hard credit pull. I know most people, they call and ask and they want a soft pull, but a hard pull is very important. So we take that loan application, the documentation that's provided, the hard credit pull, we take that information and we can run automated approvals through conventional FHA, VA. And then that helps me figure out what's the maximum amount the borrower qualifies for, which programs they qualify for, how much money they need at closing. Also through the pre-approval process, you get to see your numbers, an itemization of what closing costs might be, payments.
With you saying that though, I mean, whenever we talk to buyers about the pre-approval process, I'm like, it's so much more, like I said, than just that number. It's also telling us the loan type, which in blah, 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 which allows us sometimes to know which areas, because if it's rural development, well, that dictates certain areas, but also it gives us the guidelines to look for in a house. Like, oh, this has wood rot, this isn't going to fly, or, this needs handrails or things like that. So, yeah, very important.
Right. So yes, so when I pre-approve someone, if they need 100% financing, we get them approved for RD. Then we get back with the realtor and let them know they can't view anything inside the city limits of Lafayette so that it'll fit RD. So very, very important information. And, for the pre-approval process, for the buyer to know different, payments on different purchase price, like, a payment between 180 and 190,000 on a home, or 200,000. I mean, very important, very
No,
important
I agree.
information.
It is, because it's not only about how much, maybe you don't want to pay that much as that payment is for that amount. And so I'll always chat up. Well, they can do it in reverse and say, okay, this is what you want your payment to be. Well, it's this much house. So
Exactly.
they have the options of doing that. I think that's awesome that you run the different scenarios.
Yes.
Great. Um, so well, you answered my question. What's involved with getting pre-approved? How long do pre-approvals last for? How long are they good for?
So the credit report is good for 4 months. So I like to tell my clients your pre-approval is good for 4 months. We do have to continue to get some updated pay stubs and bank statements. And depending on credit score, if someone's, shopping for their dream home, is going to take longer than 4 months, is 7 months down the road. I don't automatically repull credit after 4 months. If it's someone with a 700 score, I wouldn't repull credit.
Mhm.
I just keep up with them with their paperwork. And then 7 months later, they call me, I need a pre-approval letter. And I just make sure that everything stayed the same. They didn't open any new accounts. And then I can move forward with that pre-approval letter. If after 4 months, they have a 620 credit score and it might drop to 610, I would want to repull credit on that borrower just to make sure that all the numbers are still the same.
Okay. Well, I think that's everything that we needed. That's so much amazing information. I know pre-approvals are, when we say the word, people are kind of curious as to what exactly that means, and they just know it's going to hit their credit. So, uh, that's actually one last question. How many times can you get pre-approved before it affects you? That usually comes in like, I don't want this hitting my credit too many times and my credit taking a dive. How do you respond to that?
I get that question every day. So, I mean, well, I don't work for the credit bureau, and this is through continuing education that I get this information. But if someone is continuously pulling their credit, they go buy a car and then they apply for a furniture loan, and they apply for a mortgage, those inquiries are going to lower their credit score. But if they're shopping for a mortgage or a car, it's my understanding it's about a 2-week period. Mortgage companies can pull their credit and it will not lower their credit score.
So they'll group them all together and it's like one hit.
Yes.
Okay, well, that's very beneficial then. So awesome. Well, I thank you so much for joining me today. Like, you've given
Thank
us a wealth
you.
of information. I'm so about educating all of our clients out there and potential clients and future clients, making them aware of this whole process. So thank you so much for helping to educate our crew.
No, thank you. Thank you.
Well, you have a super afternoon.